Welcome everyone to Market Decoded with Phileas Prop Firm and our guest Jay from Derivative Trading for the first episode of 2026. Everyone, I wish you a good and happy year. Come back a bit late for this year, but we are coming strong for a lot of good stuff. So welcome Jay, welcome back for the first episode of 2026. How are you doing?
I'm well, and you? Thank you for having me, and best wishes for everyone for this year, new year. And let's talk about the hot news we have for today.
Yeah, exactly. A lot of hot news for this start of 2026. I'm doing amazing. Thank you for that. Before we go to the news of 2026, let's do a quick recap, a bit on the overview of what we talked about in December, because a lot of the predictions from Jay actually happened exactly as he predicted. He's not like a guru, but he's using actual financial experience to decode the markets. So we talked about in December the silver rally that was anticipated before it happened with supply limits in China. We talked about it in December and a lot of traders were able to benefit from it. We talked about the risk of a regime change in Venezuela with Trump putting a lot of pressure on Maduro. It happened exactly like Jay expected. And finally, the rotation of US assets from technology to mid caps with the Russell outperforming the US markets since the Fed decision in December. So we talked about all of this in December episodes. So if you missed it, make sure to come back to watch those episodes for the new listeners to the podcast Market Decoded, and make sure to watch until the end because again, Jay is bringing some financial expertise that you'll not find anywhere else, and those predictions, those analyses, you'll not find them anywhere else. And as you see, they happened exactly as predicted. Let's get started for the first news of this year, the first segment of the first episode of 2026, the US take lagging behind Asian stocks. So 2026 has started with a quiet revolution on Asian tech stocks, crushing American tech, and the numbers don't lie. So what happens in the start of 2026 for the tech sector?
Yeah, exactly. Asian stock market, including those in Japan, South Korea, and Taiwan, have shown a solid performances thanks to a tech rally and strong demand. However, local currencies, in meantime, continue to depreciate against the US dollar. This is quite rare and indicates an unusual separation between stock performance and currency health. This currency weakness can be attributed to several factors, including capital outflow driven by rate cut from Asian central banks, while expectation of monetary policy easing in US. Additionally, investment commitment from South Korea and Taiwan to the US seems to play a role. The excitement around artificial intelligence is also contributing to the rise in stocks, accentuating this divergence. So it's clear that foreign investors are playing long cheap Asian tech stocks versus US, while in US, massive sector rotation we discussed before the December Fed meeting is still in progress. Currently, we have long tech in Asia versus short tech in US.
If you want to start trading futures without risking your own capital and get funded with the best trading conditions, join Phileas Prop Firm by clicking the first link in the description below and use the code PPYT at checkout to get the best discount available. Let's get back to the market analysis. So that's a massive change from the past few years. Is it going to be something more temporary, or do you see this play out more long term?
We will see later today. We could have the Japanese authorities which intervene in the FX market, and same in South Korea. That would bring some pressure on their stocks. But technically, I think investors are going to continue to invest in tech stocks in Asia.
Speaking of Asia, we can talk about the yen. It's dangerously close to an intervention territory, but are traders expecting the intervention coming soon or not coming at all? Because we talked about it actually in December. So what's the current situation with the yen and the Japanese economy?
Indeed, yen traders do not seem to react to the warning from the finance minister Katayama, who claims she is ready to act. Despite the this statement, volatility in the cross-currency Japanese yen against US dollar rate remain low. What indicates that traders don't expect a significant movement in short term. They seems to believe that intervention will only be considered if the yen experiences substantial fluctuation, which is not currently the case. But I think the BOJ is going to bring us a big surprise like in 2005, because this week yen is starting to reach households in Japan, and the US just gave the green light to the Japanese Minister of Finance to intervene. We had a meeting between Besant and Japanese authorities, and Besant told us that the current situation in the FX market is not great. So this is a kind of green light, and we can expect an intervention from Japanese authorities. And as I mentioned, in 2005, they used a new tools to intervene, and I think we will see the same thing.
So what could we expect as a move on the yen? So how can traders anticipate this kind of reaction, and if it happens, how to react?
If they use the same methodology like in 2005, we can expect 500 pips on the US dollar versus Japanese yen and more on other currencies because they are less liquid than US dollar versus Japanese yen.
So maybe go study what happened then to have a good idea of what might happen now and then anticipate the move. What do you think?
They can join us, and we will teach your people and the public what we have in mind regarding this potential intervention.
Okay, very good, very good. Now, while the gold and silver are exploding, there's a very different story happening in the industrial metals, and it's now worth understanding the divergence there is. So, can you explain to us what's happening in the different metals right now?
Yes, regarding industrial metals, the market has indeed faced its largest decline since June, largely due to a crackdown on high-frequency trading in China. Chinese authorities have ordered the removal of several servers used by these traders. This is wild and hard. This has dampened investor enthusiasm after a busy period in future trading. Consequently, prices for copper, zinc, and aluminium have dropped. Despite substantial gains earlier this year, there's remained a nervousness concerning physical demand, particularly in China, and ongoing pressure on commodity prices.
So, is it going to be a long term divergence between the two from now on, or what do you see for the futures of these two asset classes?
There is a big demand on physical metals, industrial metals, and that's not enough to cut the speculation on this kind of assets. We will see other tools from Chinese authorities, and I think not just the Chinese authorities, but other authorities in the region. We could see a new policy measure like that. This is hard, but I don't think in the long run it's enough. By cutting high frequency servers, it's a good tool. It's a good idea, but I think they will find another way to continue to speculate. But in the short term, this is going to slow down the velocity on the speculation.
Yeah, makes sense. From metals now to energy. Oil is in a strange place right now. Two OPEC nations in chaos, yet prices are remarkably calm. So, what's happening on oil with?
Yeah, oil prices have stabilized after a significant drop recently, following news that the US is not planning military action against Iran at the moment. While concern about Iran production still affect prices, there are ongoing US military pressure with the accumulation of US force in the Middle East. Forecasts suggest that the decline in risk premium could lead to increased volatility in the oil market as conditions evolve. Before we conclude on oil, I would like to touch one crucial geopolitical aspect influencing this market. The situation in Iran is far more concerning than Venezuela, involving potential destabilizing power struggle in key region for global energy supplies. As protests against the regime multiply and report of violence from the country increase, the risk of disruption in oil flow rise sharply. An Iranian state's collapse could have dramatic consequences not only for the region but also for the global global balance of power. It's worth noting that in northern part of Iran, tensions are also rising around several countries bordering the Caspian Sea. Here, too, they are source of oil and natural gas supplies for Europe in particular. And I don't trust Trump regarding Iran. I think they are going to try something. And like in the past, we discussed about Venezuela, and I have the same idea about what they are going to do in Iran. They are going to try something, and this could lead to a major issue regarding supply chain and energy markets. So I don't trust Trump, and I think something is going to happen maybe this weekend.
Okay, that's soon. So we'll see. We'll follow that up on the next episode. But yeah, for sure, it's a good insight. And it seems to be like impacting more than just oil markets, because it's like if we zoom out and we see all the geopolitical tensions that building up right now, 2026 has started unlike any year we've seen yet. Three major like Venezuela, Iran, and now even Greenland. Can you maybe zoom out and see the whole picture right now on geopolitical tensions that are happening currently?
US is currently trying to get all the commodities they could need in the future, mainly about artificial intelligence, because they are behind China regarding this thematic. Because China is able to create artificial intelligence at a lower cost than US, and US know that if they want to stay the leader, they have to get more rare earths, oil, and other energies, also uranium and stuff like that. So I think about Iran, this is serious. This is not just a Trump joke. They are going to do something. And I think that they have kidnapped Maduro in order to be certain to get Venezuelan oil if they create a supply disruption by targeting Iran. So I think the first step was Venezuela. The second step will be Iran.
And so for Greenland, do you think it's more like showing off strength as Trump is used to do, going full speed, strong and brutal, and then to negotiate after maybe a better deal for them, for the US to have actually the resources they need in Greenland?
Absolutely, I think this is a Trump way to negotiate, but I think he is serious. He wants Greenland and he is going to buy it. I think Europe are going to do nothing. They will find an agreement in which US is going to buy Greenland. And in the past, you had some countries who negotiate about Greenland. Technically, it's weird situation because you have NATO member who technically attack another member, but it will be a negotiation. I don't think there will be a fight between those two countries. And Denmark also had a very great relationship with the US, so I think they will find a kind of agreement. And I know that Rubio is preparing a $700 billion offer to buy it. So let's see.
Okay, so seems like 2025 was strategizing all the US what they need and how they're gonna plan it, and 2026 is going full speed, going to take everything they need and secure what they plan to do.
Yeah, absolutely. We have the midterm this year, and I think Trump need to bring something to American people in order to win the midterms. So he is accelerating, and he is going to continue, and we will see several stuff moving in the world this year. Let's see.
We will follow that up obviously in the next episodes and next weeks every Sunday. So make sure to stay tuned. Okay, so next week, what are we looking out for next week? What's the main events and what are we expecting to see?
Personally, I expect a sharp rise in volatility in the US, Euro, and Asian stock markets, as well as in the Forex market, in foreign exchange markets, starting next week. Several potential catalysts are on the table. Primarily geopolitical factors, as I mentioned just before, regarding the possible intervention in Iran. Trump against Powell and the discussion regarding the Fed independence. The Supreme Court on tariff, also, we are waiting a decision about the legality of Trump tariffs, but also central banks next week, Japanese central bank, and positioning also that are showing significant imbalances. So I think the volatility is going to come back seriously next week. We also mentioned the upcoming silver rally in our previous discussion in November and December, as you mentioned just before. It might be time to take profit on silver as the next few weeks could be volatile. Policy measure from Japan, Korea, and China could lead to a sharp drop on silver. So you have surfed the silver. It's time to take profit.
Enjoy the sweet profits. Again, a very interesting and very active trading week. Now, Jay, before we wrap up, the professional trader tips like every week, and the traders love it. So, what do you have for us this week?
One thing important, like others, but this one I think is simple but very important. Avoid tight stop loss. This is stupid and your dealer like it. Adapt your stop to the volatility. You know that your dealer or broker, market maker know where is your stop loss. If you use tight stop loss, he is going to take it.
How should trader look at volatility? Should they look at options and implied volatilities, or you think looking at the VIX will be enough to gauge the volatility and adapt the stop?
And the volatility depends on the asset in which you are involved. So you have to check the volatility of the asset you are in and adapt your stop loss regarding this volatility. For example, if you are trading a euro-dollar currency, currently the implied volatility is under 5%. This isn't big, so on euro-dollar, avoid to use a stop loss at 5 pips because the broker sees it and he's going to take it by using several ways, like paid, or he's going to push his book to your stop loss. So avoid it. And if the volatility rise, you have to adapt it and push your stop loss.
So how can they learn about options volatility and make sure that they understand how to use it properly?
Actually, they can join us. We bring a lot of stuff regarding volatility. The option drive the markets, and you have to learn and understand option. Even if you don't want to trade options, you have to understand that they are pushing the market.
Okay, so if you want to make sure to understand how to use options to improve your trading, even if you only trade futures with prop firm at Phileas, click the link in the description below to join Jay from Derivatives Trading. He's teaching all about options. So thank you for all the analysis and the amazing tip again. If you want to have the last word, as usual, go for it.
Oh, thank you. It's been a pleasure, and I look forward to our next conversation. And with the geopolitical stuff we are experiencing now, I think we will have discuss next week.
Yeah, I agree. And I can't wait too. Everyone, thanks for listening until the end. And let's wrap up here. Have a good trading week and trade safely. Let's see you on next Sunday. Ciao.